What's up, everybody? Welcome to another one of Dave's Daily Dives. Here with you as always. Well, I'm Dave, and today we're going to do what we always do, and that's take a quick look at what happened in the markets today. And then I'm going to give you 5 Zacks Rank #1 strong buy stocks that are breaking out to new highs. Really some head turners there. I was surprised to see how long the list was today, but I picked 5 of the best ones for you guys to take a look at, and 5 that I may actually be looking to include in Momentum Trader here over the course of the next couple of weeks. So lots of stuff going on. Why don't we just go ahead and get started? Still that downward trend line across the tops for the S&P 500, which we broke through, gapped up. This is a very important note, actually. The gap up through that trend line in late April. Then a rally up to new highs, which was rejected. Now, a lot of people were worried about that because that was pretty much once, twice, 3 times a lady where the market rejected that 2400 level. What have we done since then? Well, since then, we've filled this gap on the S&P, and then now, my friends, ticking up higher. Now today, again, market couldn't really get up and over that 2400 level. I don't think that that's cause for alarm right now. I think the important part was gap got filled, and that's very, very important. And of course, now this gap down has also been filled. So I think this has actually cleared the way for the S&P 500 to continue to break higher. If you don't believe me, let's use the NASDAQ as the higher beta canary in the coal mine. And you know that the NASDAQ has been on a crazy run, essentially in an uptrend since June of last year. And the NASDAQ's recent action here hasn't really gotten down to its gap. So there's still a possibility there, but found support level nonetheless. I like to draw my fibs. So let's go ahead and draw a nice little fib from this April low to the high. You'll see we stopped just shy of the 50% retracement level, started to creep back up, and now here we are just a few short levels away. A stone's throw, as they say. I'm going to show you guys here. I like to pull a simple moving average, or SMA, on my charts. Just do indicators, double click. Here I'm using NinjaTrader, and you can see the period. You can go ahead and change that to the 50-day. I like the 50-day. Go ahead and throw that in there. Apply. There we go. Give you some perspective, because I knew that here in April we came down to touch that 50-day, and then have since moved higher. So that's the story with the NASDAQ there. So still coming on strong, looking all right. What about another higher beta index, the Russell 2000, and the small caps involved here in the Russell 2000? And we've got a different perspective here. Has not been as rosy as the scenario that we saw in the S&P 500 or in the NASDAQ. Really, I'm going to make the argument that we are in a consolidation and have been for 6 months now. And levels below this sort of 1340 area I'd be worried about, and then of course the breakout here above sort of 1420 area. But look at this 50-day. It is horizontal. That means we are range bound, so we should be looking to buy oversold areas down near 1340s and actually dump the Russell as it approaches the 1420s. Until, of course, a breakout occurs. That's going to be my game plan here moving forward for the Russell. And if you were wondering about that spike in volatility that we had, you can see it here. Faded it, and the fade trade works again. And here we are now back with the VIX at 1072. That's going to keep on working until one day it just doesn't. But for now, it just keeps on trucking, right? A quick sort of global risk on, risk off play I do want to look at. That is the dollar yen here, because we had, again, a downward trend channel, but in this case it got broken to the upside. And it looked like we were going to be off to the races here on the yen, but we got quickly reeled in. Now, how did we get reeled in here? Well, good old fib. So this 23.6 fib provided some resistance here on the yen trade, and then it came down again here to test this 50% level. Now, it looks like in the short term that this 50% level has been met with support and the buyers have stepped back in. If that is in fact the case, I expect a new trend channel to be developing here in the bullish direction on the dollar versus the Japanese yen. Of course, dollar yen to the upside means risk on for the market, so that should be good on a global sort of risk on scale. Okay, so now why don't we dig in a few of these individual stocks. The first I'm going to talk about is Credit Acceptance Corp, ticker CACC. So they do financing programs and related products for car dealers. And I know a lot of people have been talking about this car bubble that's forming, or at least car financing bubble, but I think until it pops, you have to go with the bullish names in this space. And again, this is a Zacks Rank #1 strong buy. So that means earnings estimates have ticked up continuously here on CACC, providing some great support on the fundamental side for this move up. Broke on through the previous 52-week high near 220, and now you have a commodity channel index that's a little bit overbought here, but I think I'd be looking to play the breakout here from the 220s. You can leave a stop just shy of the 220 level for a relatively tight stop and decent risk versus reward. The next is among my favorites, the SIBO. You guys have probably seen me live from the floor of the SIBO talking to Bloomberg Television, and it's been another great run here for the SIBO, finding support at the 50-day moving average on several occasions. Now the stock's up at 85.73. Money flows have been positive since March, further confirming the bullish trend here in SIBO. This is one of those you can buy and just forget about, ticker CBOE. Then we have Delek US Holdings. They're an integrated energy company with petroleum refining and transportation services. These guys had a 1-2 triple top that they have broken out from now, which is great. So again, the way to play these breakouts is you just go ahead and buy and then put your stop loss shy of that breakout level. So you're not going to get it. You may have a much lower success percentage here, but when you lose, you're going to lose really small, and when you win, you're going to win big. So again, money flows have been very nicely positive. A little bit overbought on the CCI, but that's to be expected from a stock that's breaking out to new highs. That's Delek US Holdings, ticker DK. Then we have iCore Holdings. They engage in the design, engineering, and manufacturing of fluid delivery subsystems for semiconductor equipment. So it's a semi-manufacturing play, essentially, is what you got to look at. And again, we have a new breakout here from 2150. Very strong. While the money flow has turned up, which is good. Commodity channel index bounced at the zero line, crept on higher. Lots of positive momentum. 50-day moving average here providing support down at 1915. That's iCore Holdings, ticker ICHR. Maybe it's Icar, like Icarus? I don't know. iCore, Icar, whatever. iRobot here. So they do, well, robots. Most of, like the Roomba, right? So floor cleaning bots, pool cleaning, automatic mopping, this kind of thing. Automation, so definitely an automation play. And if you see this, the market is liking the automation play. Huge rally up recently. See the 50-day moving average got leapfrogged here in May, or rather March. And the stock just hasn't looked back. And again, this has been met with positive earnings estimate revisions from analysts. So that's why it's a Zacks Rank #1 strong buy right now. And you can see that those money flows have been decidedly positive since March. So lots of bullish behavior here on iRobot, ticker IRBT. All right, folks, so that's all I've got for you today. Remember to follow me on Twitter at Bartosiastics so you can get up to speed with all of Dave's daily dives, as well as check out Zacks Live Trader, Zacks Momentum Trader, and Home Run Investor. all of which I am intimately involved in. So thank you so much for hanging out with me here today on Dave's Daily Dive, and I will see you all later in the week. Have a good one.